What's up, everybody? Michael Silva here. How are you doing? You're watching the Daily Stock Market Brief, the show that I do Monday through Friday. Today's show is going to be a little bit different than usual. If you're new here, well, welcome. I'm going to be showing trading ideas. So we're going to be going over 10 different stocks to watch. Usually what we do is we go over all the indices, we go over commodities, and just various other asset classes using technical analysis and intramarket analysis to get a good idea as to where the market might be going next. But we're going to kind of keep it short on that part and then hop into the trading ideas. We're going to look at the S&P 500, kind of create a framework and foundation as to what I'm looking at going into next week. And then obviously, markets can change very quickly. So we're going to have to constantly kind of stay updated as days continue. And that's why I put out a show every single day for the most part. Let's go ahead and just hop right into today's episode. What's up? Welcome back. A calendar from MarketWatch. I just want to point out next week, OPEX week. Typically when we get OPEX week, it's pretty bullish week overall, and the VIX typically gets crushed. If you don't know what I'm talking about, that's fine. I'll show you some charts. Orange is highlighted for a holiday. Option trading ends, option expiration there on the 20th there. So OPEX week. I want to go ahead and show just a dashboard as to where the market played out today. You can see fairly quiet day. However, there was quite a bit of noise throughout the day. To be quite honest, today on the S&P 500 and various other indices, it looked exactly like yesterday, right? We had this gap up, everything looked fine, and then it kind of just kerplunked down and then kind of rallied back a little bit. So two very interesting type days. We'll get into those charts. Energy back at the bottom of the list, and it was at the top of the list. First it was at the bottom that we marked it off, then it was at the top, now it's back at the bottom. I do think energy dips are going to get bought. It's probably consolidating right now. I'm not going to go over that into too much detail at this particular point in time, but it is still one of those sectors that I'm pretty keen on at this given time due to relative performance. The S&P 500 on the daily time frame, very similar type candle as we saw from the previous day. However, even more indecision. You can see that by the very thin real body that's considered a doji candle. It has a little bit longer of an upper wick. One thing I want to call out, it had a higher low, had a lower low or lower high. So it's an inside trading day. This could be a period of consolidation for potentially another run up higher. Like I said, OPEX week is next week, and OPEX week typically is pretty bullish. Not all the time, but you typically see the VIX go down and then you see stocks run up. You can't just say that with absolute certainty, but it's been kind of a theme that we've noticed. Price percent oscillator still trending up, and the overall context, short-term, medium-term, long-term, bullish. I can see that by looking at the moving averages, right? Green is the 20, then the 50 is the blue, 200. We have a big spread between the two. Yesterday's video, we talked about the similarities between February here and then February of 2020 before the market crash. And one thing that I forgot to mention on that was both times on that dip to new highs, they both tagged a 50-period moving average. So I thought, I forgot to mention that. Maybe I should mention that. That's the dinosaur pattern that we were talking about, the Brontosaurus pattern. Little leg there, and a long little neck. Just joking, obviously, but that's not a real pattern. I don't want anybody to actually Google that. Actually, yeah, no, totally, you should Google that. We're at the upper range of this upper channel right here. And, this little tiny candle 3 trading days ago, this was when we said pump the brakes, right? It could be a period of consolidation. Or are we going to break out? But basically what I pointed out there was, okay, a small range candle means from a large move up, it means that, speed is slowing down. And now look at, right, the last 2 trading days, you can see it's just been going sideways and just some weird price action while resistance is holding in this bullish context so far. All right, so maybe we come down, maybe we don't. We got a little bit more to kind of talk about here. Just to kind of wrap your head around before we get into the trading ideas, okay? It's all important to know, because if you see S&P 500 get hit hard to the downside, you can, bet that a majority of the stocks, because it's a broad-based index, will get hit to the downside as well. 30-minute time frame, symmetrical triangle. Yesterday, we had this drawn out as a bull channel. We broke down, we back tested, and guess what? We marked that out as a potential bear flag. Boom, fell to the downside, but it did create a higher low. So now we're looking at the symmetrical triangle. Look, I don't know where the futures market is right now, but if we gap up tomorrow, look for the potential for another very similar type trading day where we gapped up, fell down, gapped up, fell down. Maybe we get another gap up, fall down, but this could act as a potential area of support. Not for sure, but we still are in bullish context on this chart as well. You can see higher lows. 200 is sloping up, 50 period is kind of sloping up, but it's kind of going sideways right now. So lower highs, lower lows, kind of compressing within this little consolidation period. So, it's just something to take note of. It could be just consolidating before a higher move, or it could be potentially rolling over very slowly. We don't know yet. But when we look at the VIX, yesterday we filled that pink box gap down here, and that was when we said, okay, when it was coming down here, we said, okay, time to pump the brakes, right? This is where you want to start taking profits. You can see now the market has been acting a little funky. It's just been going sideways. And by funky, I mean it's not just going straight up, right? It's taking some consolidation, which is very weird to see. Today on the VIX, we came back up, retested this trend line. So this trend line is something of technical importance. And then we kind of crash back down. All right, so if we crash back down and we're going into next week where it's OPEX week, maybe the VIX has more momentum to the downside so we can potentially come to the low end of 20 or potentially even try to come in to fill this gap a little bit more. Now, you want to be very careful when we start filling this gap. One, stocks would probably potentially move higher, moving down into this area. But then if it starts coming into this area, you do want to pay close attention, because if we act as support down here and it starts ramping up higher, then you can see the inverse happen on your stocks where they can head lower. So yes, we did tag that. Now we're kind of trending sideways, right? We could trend sideways, or potentially head a little bit lower to fill this gap. That is an inverted type hammer. So it does suggest more action to the downside. But we'll see. And then also, if we start breaking above the trend line, or this area of confluence here and this area in confluence here, maybe that does shoot us up higher and we see another vol spike. Now, a lot of eyes are on the VIX, a lot of eyes are on the dollar. And I wanted to show the dollar right here. We've been going over this chart, but I wanted to compare it to the same time frame as the SPX, or the S&P 500. Notice just how perfectly they are inversely correlated, right? So I had to draw outlines so you can see this, right? So we have lower highs, higher lows on the S&P 500, right? This was that 92 handle that's very important for the dollar. And you can see we broke down through that, and you saw when they broke above that resistance during around the same time, the S&P 500 really started moving higher as the dollar continued to move down, all right? Now the dollar, when it broke out, we see that right here, it kind of went sideways a little bit while it was breaking out, but then finally we saw a little bit of a pressure to the downside on the dollar. What do we see happening right now? Well, we're having the S&P 500 kind of match in or run into this area of resistance here. It's kind of going sideways, and then the dollar is doing something very similar. It's pulling into an area of support, creating these little tiny hammer candles. Hey, who knows what's going to happen, but what does seem plausible is we'd start breaking down below the low, which is 90.25. Let's call it 90.25. So if we close below 90.25 on the dollar and it starts heading lower, I feel like the S&P 500, just by looking at this, will break out of this little consolidation and move higher to try to reach 4,000. However, if the dollar is putting in a higher low right here comparatively to this low, that means we would start heading up, and then I would think that the S&P 500 at that point could come down and touch the lower range of this channel. I do not think that the shorts are worried on the dollar trade right now until we start getting above 92. 92 clearly acted as support, and then when we broke down, it flushed through. So if we get above 92 decisively with good volume and strength, then I think that the shorts might begin to cover, and that could present a potential opportunity for a squeeze push higher, potentially into 95, 96, or into the 200 period moving average, which is right around 94. So kind of a zone up in that area. Keep in mind, the context is still bearish on the dollar. The context in the S&P 500 is bullish, but it's a good idea to keep an eye on the VIX, the dollar, the S&P 500, and then volume too, as well as your trading, okay? So I just wanted to point out the correlation to what to look for. Hey, if we start seeing one move in a certain direction before the other, you can think, okay, well, interesting, the dollar's spiking up pretty, with fervor right now, if that's the right word, or ferociously. I don't know the word I'm trying to look for, but if it starts spiking up in a rapid manner, in a day, 2 days, and you start boom, 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 but the market is still consolidating, that could be a warning sign that the market could be starting to head lower. And by market, I mean the S&P 500, all right? So that's something to just keep an eye on. And, vis-a-vis, the same thing can happen from the opposite. If we start breaking down, maybe this little pattern could be flagging out, bull flag, boom, and then shooting up higher. And, on the 30-minute time frame, you can see that symmetrical triangle. So if the dollar breaks down, you might see this break out of this symmetrical triangle and continue to head higher. So hopefully that kind of makes a little bit of sense, so you can see multiple different aspects of the market and kind of where we stand, right? We're running into resistance on stocks. There's a lot of euphoric, just mania going on. We're seeing some individual stocks traded, at 300 times, where they were 3 weeks ago. It's absolutely bonkers. So just know there is gravity involved with all of this. And I'm telling you all of this because the trading ideas section that I'm going to show you, they're not just like, oh, he said buy this stock. I'll never say, oh, just buy this stock. I'm going to show you kind of why I'm looking at these charts, the 10 charts, and I'm going to try to go through them fairly quickly because I'm just kind of rambling on right now. But just know that you have to monitor your risk. Manage risk. Position sizing is super important. Okay, you don't want to go all in. I was talking to a buddy today, and he was in CTRM, and he could be listening to this. And if you are, leave a comment, Adrian. He's in a position of CTRM with 20,000 shares, and he got in at 39 cents, and that thing's at like $1 something. I'm like, you haven't taken any profits yet? That thing has run over 140% in the week. You need to take profits when you're given. And then I asked him, okay, so when do you plan on selling? And what he said was, I plan on selling if it gets to $4 or $5. And I said, okay, what if it goes to $1? And because that's a big loss right there. I mean, he'd still be positive, but he said, well, I don't know. I haven't thought about where I'd sell if it continues to head down. Well, yeah, because that's euphoric behavior. People are only thinking about where it could potentially go to the upside, but you got to think to the downside. That's a very, very important thing. So yes, people are making money left and right. You can be blindfolded, throw a dart and hit a bullseye right now. That's just what it is. That is just the current environment. But just know, as fast as you can make money, you can lose it even quicker. That's the reality of the markets. So don't be in a rush, okay? Why? There's no reason to be in a rush when trading, especially if you're trying to do this professionally or for a long-term, source of income. You need to be consistent. And you can't be consistent by taking positions that are 100% size of your portfolio or even leveraged on one single stock. You can get lucky, but that same behavior that got you lucky will be the same behavior that takes everything away. Let's get into the first stock. Ticker symbol CMPS. Okay, what do I got going on here? Well, first off, false breakout. Nice volume though. Ascending triangle. And I want to point out these moving averages did cross over, which is nice. So we have the 5 stacked above the 10, stacked above the 20. So this period of consolidation could be the early start of a breakout. I wouldn't mind getting into this if we can have a daily close above the horizontal line. But you can also speculate that, we're going to continue to move up higher, see where it opens up, because if we start heading down a little bit lower into these moving averages again, that could present a good opportunity too as well at around $48. So just keep an eye on this one. My target idea would be more up in this range where the previous high was on the chart, at least 58 to around 62. I would definitely scale profits at this previous area of resistance. That was this high of 54.86. As far as a stop loss, I would be moving it. There's a couple things you can do. All right, a couple ways you can sell a stock. You can put it but below the low of the previous day trading candle. So for example, if I got in tomorrow, I put my stop loss below 44.60. So I put it just below that to kind of hide behind a wall. So 44.58. All right, and then I would let the day go. If I get stopped out, I get stopped out. You can also use a moving average. Okay, like for example here, when all the moving averages crossed, you could have went below the low of this candle. You wouldn't have got stopped out. This one, you would have been fine. This one, fine. This one, fine. And then you would have been stopped out right here. All right, so that would have been a good move. However, if you use something like the 10-period EMA, notice here, you would have got in, okay? You wouldn't have got stopped out. You wouldn't have got stopped out. You wouldn't have got stopped out all the way until here. So sometimes it works out in your favor, but also note that sometimes that doesn't work in your favor. So there's a couple ways you can do it. You just need to pick out which way is best for you, all right? Now, I want you to remember that stuff going into these other charts because I'm not going to explain that on every chart. Here's W ticker. Ticker symbol double. Oh my gosh. BW is the ticker symbol. Blah, 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 blah. Cupping pattern. Good volume coming in here. Bullish context. We closed above the previous high. You know, is this a fake out? I mean, keep in mind we have a negative divergence right here, okay? A little scary. But if we start getting above $8 with this volume and then breaking above this, that could push us a little bit higher, and you just want to monitor your stop. On something like this, because we're pretty extended from the moving averages, I can see, like, you know, you can use a moving average, or you can just do, you know, the previous one where you put the stop loss below the low of the previous day's trading candle. So either way would work. Here is ticker symbol GES, 17% short float. All right. When you think about a short float, that means people, and that's a high short float. Okay. I mean, not comparatively when you saw GME, AMC, and all these, you know, crazy squeezes, but 17%, I usually typically look for, you know, 15% or higher. 17% is up there in my range. You need to look for a good solid pattern and then an area of resistance that potentially the shorts are going to have to cover. And what does a cover mean? Well, cover means that they're going to have to buy back shares. This is why I like having shorters in the market, okay? When people say shorting's bad and all this whatever, no, we need shorters in the market because it does good for multiple different reasons. I'm not going to get into them right now. All right. Well, actually, yeah, liquidity is one of the main reasons. But $26 looks like that big kind of overbearing resistance right here. It's been consolidating, you know, for a while here. So I would feel like if we get above 26, I feel like the shorts are going to have stop losses where they're going to have to cover their positions because momentum buyers in this given pattern might need to start buying into the momentum, which can force more buying action by the shorts. And what typically happens if that is the case, you can see a squeeze pretty significantly, you know, a very fast move. So you need to be prepared for that type of move. You can speculate that that's going to happen by entering in now. The moving averages did cross over, so that's good right there. And then having a tight stop loss, or you can wait for the breakout. You just need to be prepared for if it does break out. Keep in mind the MACD, it is, the histogram is moving up a little bit, but it's still bearish. It's still above zero though, so that's good. Bullish context overall, inverted hammer candle, so it could bounce around a little bit longer. This is a high beta stock, so you need to be careful on this one as well. Another thing that I want to call out here is if it does get squeezed and moves above 26, sometimes those squeezes, they get sold back. So you get a big move up and then you have everyone take their profits really quick, which can create just a long upper wick and then it shoot right back down, right? So buying, one big green candle and then boom, sell to the downside. All right, that's a big possibility. So you need to be aware of that and make sure you take profits if there is a squeeze past that $26 level. Here's ticker symbol IVR. Now I'm going to be going over a couple charts that are part of the Holy Grail setup. This is by Linda Rashiki. It came out in a book called Street Smarts in like 96. Sweet little short-term trading ideas. This, you have to be trading this with a particular set of rules, all right? And I'm not going to get into all of that right now, but I'm going to tell you kind of why I'm looking at this. Well, first off, we came into this area of support, the 20-period moving average. So this is how I would trade it. If we can get a confirmed candle, either a daily close candle above the high of the previous day candle, which I'm just going to say it's at high of 392, so say 396, 395, or even $4 for that matter. If we can get a confirmed close, then it would be a good entry point. Okay, it would confirm that this consolidation to the side, then we had a solid breakout above it. Now you can buy intraday, or you can wait. You know, if you want a confirmation, you want the confirmed close. Then you would have a stop loss below the low of this candle that hit the 20-period moving average, the EMA. That low was at 373, so you would put it at 370. I would put it at 369. If you want to be even more tighter, you can do it at 371. But the thing is, when you're right by that round number, that 370, you kind of want to hide behind it. So I would say 369 would be my stop loss, and my entry point would be either 401, or if I really felt confident, I would enter in at 395. Yeah, I'd probably say that. So that kind of zone up there. So that's how you would trade this one. As far as the orange boxes go, those would be targets. And note that this would be the last swing high. So this is where the main target would be, but you can take profits along the way. And then if it reaches up here, you want to remove all the position or the majority of the position, because chances are, that's going to be a pretty significant area of resistance. And you can always, by the way, you can move your stop loss up below the low of the candle or follow along with the moving averages, whatever you choose to do. The next one is ticker symbol GOGO, traded on the NASDAQ, another holy grail setup, quote unquote. You want to wait for a confirmed breakout above 1450. Your stop loss would be below the low of this candle, which is 1256. So if you want to give it a little room, I'd say 1249. And then your target one would be right around just under 1550, 1549 if you want to be under that wall and catch it before there's hesitation. And then also the swing high, which is just above $17, so we'll call it $17, would be that target where you really remove the majority of the position. So it just depends on how you decide to trade it. But just know if you do capture a move from $14.50 and it goes up to $17, 14, 15, 16, 17, that's $3 per share, all right? So you need to make sure you're aware of your risk versus reward. If you buy 100 shares and it moves up $3, you're up $300. But notice that if you buy it at 14 and it goes down to 12, or whatever, we're just using round numbers, that's 12, 13, 14, that's $2 per share. And you bought 100, that means you can lose 200. So you're risking $200 to potentially earn up to $300. So it's not a straight up 1 to 3 risk versus reward, but it still makes sense from a trading strategy perspective, according to obviously a professional. I didn't make this strategy up. I just know how to find the stock setups. All right, here's ticker symbol NKLA, Nikola Corporation. This is a popular one, right? Another holy grail setup. Bearish crossover on the MACD. RSI is kind of trending down, but it's still above 50. You need to wait for confirmation above the line, right? Okay, because you don't want to just enter in, be like, oh, okay, cool, I'm just going to enter in, but then it continues to roll over. You need to see some move above these candles. So, for example, you can wait, I would say, above 24, so maybe 24.50, or if you want to make it even this high right here, you can say even 25.60 or even 26 at that matter. It depends on how you want to play it, but you typically, when this happens, you look at the previous day candle. That was this one right here, and that was also on the 20-period moving average. So if it would be, you can use this candle here. So the high of that candle was just above $24. So maybe $24.30. That would be the entry point, but you want a confirmed move. It would be nice to see some stronger volume come in, and you want a stop loss below the low of today's candle, which is at 22.06. Now keep in mind, this could consolidate more sideways. Okay, so if it does continue to consolidate more sideways, you need to adjust your trading style and strategy accordingly. All right, so that would be the entry point above the green line, stop loss below. The last swing high was right here at about $30. So just below that, you can take all the profits off the table. This right here does make for a pretty solid 3-to-1 risk versus reward ratio. But keep in mind also, this thing is a fast mover, high beta. Look at each of these candles. They look small, but some of these candles move, from $28 down to, almost $22 in a single day. So just a massive move per share, right? $6 per share. So if you have 100 shares, you would have lost, and you bought right here, you would have lost like $600. So you got to be very careful playing these ones. Here is ticker symbol TPGY, and I want to call out, it was just a bam, massive gap up. Clearly, this is a newer traded stock. We have a period of higher lows taking place and a wall of resistance right at above 34. So I would just put this on the watch list. If we can get a confirmed breakout above 34 with some good volume, this could be a good trade. If you want to speculate that this is going to continue to go higher, you would just buy in, in this range right here and have a stop loss below the trend or below the low of this previous kind of pullback low candle, which is right around 24. This is also a high beta stock, so you got to be careful. Best typically, if you want, more solid returns, it's best to, I wouldn't say solid, like it can go either way, but just know there's pros and cons to each approach, okay? You can speculate down here that it's going to break out, or you can wait for confirmation. The benefit of speculating is that you get a better entry point. So it means that if it does break out, you get higher returns. However, if you speculate and it continues to break down, well, then you lose money, right? Whereas if you were waiting for a breakout and it didn't break out, you wouldn't have lost money on that specific trade. The con to waiting for confirmation is that you wouldn't get as good of an entry point. However, the benefit is you can see other momentum buyers potentially move into the trade as well to push it up higher. So, you got to think both ways there. Now let's look at a couple weekly time frame charts. So these are a little bit longer setups. They look good on the daily too. Just a long-term positive divergence building on the RSI and the MACD. Trend line, it's starting to get broken right here. It's kind of fluttering around $5. So this could be the start of a potential, bigger move. We could have seen a double bottom here. Now we're getting continued strength, running into $5, which is clearly support, 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 resistance, support, resistance, resistance. And now if we start breaking out confirmed above that, this could be a pretty solid play for a longer term trade. Now keep in mind also, the moving averages are crossing over right here, which is very nice. It hasn't done so for quite some time. All right, so this could be the start of a more longer term move to the upside potentially. All right, potentially. Here's ticker symbol ITCB weekly time frame. So it's also longer term. You got just a nice strength coming into the RSI and the MACD. You got some more volume coming in here on the weekly time frame, right around this area of resistance, and you can see the spread between the weekly EMAs, 5, 10, 20, is looking pretty solid. So this breakout could continue to press up higher, which would be nice, right? And then you'd see immediate resistance right around $6.50. But overall, you can see the higher lows building after this move down. So this is good. We're starting to see strength come in to this specific stock. The next one I want to call out is more of a, you need to be patient on this one too, but it's playing into panic. What do I mean? Well, we saw a huge move. Okay, so this probably created a lot of people to come in, oh yeah, buy, 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 all this news around it. People that are uninformed, they buy, 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 buy. That's the long upper wick right here. That's buyers that are trapped. So you have people that are trapped up in here and then plow, just sold down tremendously. So a very scary looking candle is as high as 1249, as low as 577. So huge move. Now, if you don't know how to read candlestick charts and you look at line charts, you'd be looking at the daily candle and you'd be like, dang, it's up 65%. This thing could go to $100, That'd be poor thinking. Because you wouldn't be taking into account, the price action and the psychology in this move and how people are feeling trapped up in here. All right, so how would I play this? Well, first off, gaps typically offer support. So you need to be patient and see if we can come down into $4.50. So an entry point at about $4.51. I'd have a stop loss below that. So probably $4.45, or if you want to give it a little bit more space, you can do that too. So it would be a very good risk versus reward, because if we get a bounce from that level, if it does come down and bounce, that would be just a killer, more than a 3-to-1 risk versus reward trade. But say if you do have a very tight stop loss, you enter in here, say if it hits the low, bounces just to hit the, retest the low of this candle. The low of that candle was 577. So you'd be getting at 451, and then your trade could go up to 577. That's a pretty huge percentage point move, and relatively could be a quick period of time, okay? But you got to be careful. You got to have a stop loss, and you got to just, be patient. Don't just buy in now. That'd be, you could get lucky, but, if you continue that, you can get white. So just to kind of conclude everything that we talked about, I didn't put a conclusion slide, oops, but just to really kind of wrap your head around everything, understand the context of the broader market, coming into an area of resistance, right? Next week, typically you see the VIX get crushed, which means the market could push higher. But we don't know with certainty, so you need to play this very carefully, because we're at some confluence with multiple different charts, meaning we're at confluence with the broad market S&P 500, we're at confluence with the dollar. You can see this mirror kind of image taking place right here, and confluence right here on the VIX. All right, so I'm providing you with long setups because potentially this VIX can get crushed into next week and potentially come to try to fill this gap, which, good luck trying to fill it, because it's been trying to do that for a long time. VIX gaps do get filled, and we have gaps above us too. So you need to be careful if we start breaking above this trend line, because then all those stocks that we just went over, some might play out still fine, but you just got to be mindful that a vol spike like this can send ripple effects in all these individual stocks. Okay, hope that helps. Hope you got some good insight. Hope you got a good look into how I think, how I kind of look into charts. I will see you back here on the next market brief. Goodbye.